Hello, welcome to the new chapter, that is accounting equation. This is the expansion of accounting equation. Assets equal to equity plus income minus expenses plus liability. Earlier we said asset equal to equity plus liability, right? We are splitting the equity into equity plus income minus expenses, okay, with liability. That is the expansion. So this expansion I am explaining here, right? How this portion is arrived, okay? So assets, equity also, now income and expenses, how minus income minus expenses, you are going to learn how to derive at this point. Liabilities also, okay. So here, uh, trading and profit and loss account, vertical format, I am presenting here trading and profit and loss account vertical format and T format, okay. This is the T format. In the This is the separate mode, okay. So here trading and profit and loss account, we used to present here income and expenses only. We used to present here only the income and expenses only. Here sales, we have mentioned sales here. From the sales, we are deducting the sales returns, the returns made out of our sales, right? That's we have to deduct it to show the gross sales. That one is the correct sales. Otherwise, if we don't deduct it and sales show that sales return, then we are overstating our sales as well as we are overstating our income, okay. Then thereafter we are adding the, this is the separate one, sales minus returns, gross sales. Thereafter we are mentioning here opening stock, right? Opening stocks available at the beginning of the financial year, okay. At the beginning of the financial year is called opening stocks. This is the opening stocks. Next one is purchases. During the year, purchases we are adding with the opening stocks, right? We are adding the purchases with the opening stock. Then we arrive at stock available for sale. This amount, when we add these two, we arrive at these two is this, these two is this, okay. Then stock available for sales, okay. Then closing stock, we deduct at the stock available at the end of the financial year. Stocks available at the end of the financial year. If we deduct that one, the cost of sales, we arrive at the cost of sales. This is called cost of sales. Opening stocks plus purchases minus closing stock is called cost of sales. Understood? Opening from the, if we add the opening stocks with the closing stocks, if we add the purchases with the opening stocks and deduct the closing stocks, then we will arrive at the cost of sales, okay. That is the cost of sales. Then if we deduct the cost of sales from the sales, it will arrive at a gross profit. This is the gross profit part. Gross sales minus cost of sales equal to gross profit. Then this is the gross profit. Okay, can you understand this one? Sales minus cost of sales equal to gross profit. This is cost of sales. This is the gross profit. Okay, and from here, this account close trading account. This is called as up to this point. It is called trading account. Sales to from the sales to up to the point of gross profit calculation is called trading account. Thereafter, it calls profit and loss account. Okay, so when we amalgamate both things, we call it as a trading profit and loss account. Okay, trading profit and loss account, because it contains two accounts, trading profit and loss account. Up to this, it is trading account. Up to this, sorry, up to this, trading. Trading account, right? Okay, this is trading account, this section. Okay, here onwards, it is profit and loss account. The course of the process of ascertaining the net operating profit or loss account. Okay, so up to the trading account, if you are okay, then we can proceed with the profit and loss account. Sales minus cost of sales, sales, gross sales minus cost of sales equals to gross profit. If we add with the gross profit other income, other income means we can say discount received, interest income, scrap sales, etc. Okay, interest income in the sense whatever the interest received on fixed deposits more than 2 or 5 years, more than 1 year, it is called interest income. Savings account, if we have a savings account, we can receive the interest. That also will be treated as interest income. Scrap sales in the sense obsolete matters, disposable of obsolete matters. Okay, that also coming under here. So when you add this other income, then here gross income, this is the gross income, gross profit plus other income called gross income. From the gross income, we are going to deduct the administration, distribution, finance expenses and other expenses. Okay, here administration expenses called salaries and wages, that is administration expenses, salaries and wages for the staff, stationery expenses, depreciation made for the building, that is depreciation, other staff cost. If we call the other staff cost, we can say that statutory payments, which the statutory payments which we have to pay on behalf of the staffs salaries and so on and so forth. Okay, so statutory, yes, other staff cost, it is coming under the other staff cost. And electricity bill, electricity and lighting, water, general expenses, building maintenance. If you want to do the painting for the your own building, that cost is coming under the building maintenance. Postage, any what you call the correspondence expenses coming to the postage expenses under the administration expenses. Okay, then you would have understood from administration, salaries and wages, stationery, depreciation, other staff cost, electricity, water, general expenses, building maintenance, and postage. But the administration expenses mentioned here not limited to this one. Okay, there are so many administration expenses there. During the course of the exercises we can uh, understand those things. Okay, this is the administration expenses. Next one, we comes to the distribution expenses. In the distribution expenses we used to take depreciation for motor vehicle, means the motor vehicle used for the sales activities. For that the depreciation made is mentioned here. If you don't know what is the meaning of depreciation, we will in the later on we will give a detailed lesson. We can have a detailed lesson on depreciation, bad debts, provision for doubtful debts, those matters. Okay, at the moment you keep it in your mind. Depreciation will come under the distribution expenses. Bad debts will come under the distribution expenses. Provision for bad and doubtful debtors comes under the distribution expenses. Other thing is discount allowed. For the purpose in the sales, if you are giving a discount for the customers, that discount allowed is shown under the distribution expenses because of the sales. Discount allowed related to the distribution expenses. Discount received related to the other income. Okay, other income, because we are when we are purchasing we are getting discount. That discount is income for us, so we are showing under the discount received. This discount is given to the customers on the sales, on discount allowed. This is coming under the distribution expenses. Next one is advertisement, right? Advertisement expenses, any sort of advertisement what we make is coming under the advertisement expense, not for the staff's advertisements. This is related to the sales promotion. Any expenses related to the sales promotion, this it comes under. If you say commission paid on sales, special sales, that commission will be shown under the distribution expenses. Okay, not under the staff expenses. If you are making a payment to the agent to promote our sales, and based on the promotion, if you are paying him on commission, that commission, sales commission, will be shown under the distribution expenses. Okay, I have not mentioned here. Later on when we are doing the exercises you can learn about it. Next one is finance expenses. Any interest or any charges paid on loan received for the business operation, I mean loan funded for the business operation, is shown under the finance expenses. Okay, if you say we are running out of money to expand our sales, then the company will go to the borrowing option. There is a two option, only one option, that is going for the borrowing or not. So the company will go for the borrowing. Then if you go for the borrowing, the lender or the person who is financing or lending, the lessor or anybody, will charge a cost, that is interest. We have to pay them monthly or yearly or some sort of way. That expenses will be shown under the finance expenses. Okay, in other thing is other expenses. Under the other expenses we have to show donation, trading stock written off. Okay, other expenses, we can show donation, trading, stock written off, etc. Okay. Trading stock written off in the sense any obsolete stocks that cannot be sold in the normal course of the trading activity, we had to sell it and dispose it. So if we cannot sell it and dispose it, we had to write it off from our books of accounts rather than keeping it for a long time. So trading stock written off amount is coming. So from the net income, right? Net, sorry, gross income. This is the gross income. Okay, gross income from the gross income. From the gross income, we have to deduct the administration expenses, total administration expenses, and total distribution expenses, total finance expenses, and total other expenses. Then we arrive at net operating profit or loss here. This is net operating profit or loss. First of all, we are preparing the trading account, that is sales. From the sales returns we are deducting, then gross sales is coming there, and then we are calculating the cost of sales. We deducting the cost of sales, then we are arriving at the gross profit. From the gross profit to the gross profit, we are adding the other income, then we are arriving at the gross income. From the gross income, we are deducting the administration expenses and distribution expenses, finance expenses, and other expenses. Then we arrive at net operating profit or loss. This is the amount. Okay. So now you got an idea. I think you would have got an idea what are the elements coming under the trading account, what are the elements coming under the other income, other administration expenses, and distribution expenses, finance expenses, and other expenses. So if you get an idea on this, then rest of the thing is bit easy for you to learn. Now I want to show you the T format of this vertical profit and loss account. Right? This is trading. This is trading profit and loss account. Right? From here, we cannot say this side is debit and this side is credit. DR and CR, that I have mentioned there. This is a T account. We are presenting that vertical format in the T format because at the beginning level I want to show you in the T format, right? Until you are familiar with the accounting double entries and these account headings. Thereafter we can go for the uh, vertical formats and we can get used to the vertical formats. So here also same thing, we are presentation is different, that's all, nothing is new here. Okay, in the trading and profit and loss account we have to see opening stocks here, right? No, sorry, we start with the sales. sales has to be mentioned in the credit side, sales return has to be mentioned in the debit side, but we want to show it by deducting from the sales. That's what we are showing in the credit side. Then we are deducting, then it's okay now. Then we are deducting the sales return, then gross sales, we are arriving at the gross sales. Okay. Thereafter, opening stocks, we are mentioning here in debit side, opening stock here. Then second one is we are adding the purchases with the opening stocks. Then we are arriving at stock available for trading. Okay. And we are deducting the closing stocks. Okay. We are deducting the closing stocks. When we are deducting, we will put the brackets there. Right. When we are deducting the closing stocks, then here we are arriving at the cost of sales. Then we are arriving at the cost of sales. Okay. When we deduct it from the gross sales, from the cost of sales from the gross sales, then we arrive at the gross profit or loss. This is a gross profit. If it comes this side, credit side, then gross sales, gross loss. Right? Here we assume that it is gross profit. Okay. Then gross profit carried down here, gross profit brought down this amount. With that, we are adding the other income, right? We are adding the other income. Then here we are arriving at the gross income. Okay, gross income. I didn't write it here in detail. These things are I haven't mentioned, but you can write it off and see for to have your look. So other income is mentioned here, and we are adding that one. Administration expenses debit side. All the expenses are debit side now. So administration expenses, blah 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 blah, like this, those things we are recording here, and we are arriving the total administration expenses. Distribution expenses, total distribution expenses, we are recording all the distribution expenses here, totaling here distribution expenses. Finance expenses, we are mentioning here finance expenses, totaling here. Other expenses, we are writing all the other expenses, and total is here. Then all these expenses has to be deducted from the gross income. Then we will arrive at the net operating profit or loss. If it's the balancing figure is coming on the debit side, then it is called as net operating profit. If the balancing figure in credit side, then it is the net operating loss. Okay, it depends on the balancing figure, which side it is appearing. That's on that only we can decide whether it is a profit or loss. Here we assume it is a net operating profit. Okay. Okay, I think you would have understood all these things, and we can do the next exercises. I'll meet you with the exercises. Okay.